Hello everyone, and welcome to this week's Motor Trade Radio podcast. Powered by Motors, the driving force behind multi-site advertising. With Philip Nothard and Curtis Hutchinson, bringing you all the chatter that matters.
Well, it's certainly been a busy week for various other reasons, Curtis, this week, but we're declaring up front this is going to be a Trump-free zone. So we're not covering any of the US politics and the inauguration of Donald Trump. So we can safely leave that to everybody else today, can't we?
Although, having said that, Phil, I don't know about you, but it was the inauguration on Monday. We're recording this later in the week, but it's already feeling as though he's never actually been away.
God, yeah. You're going there. We said we won't go there.
I know. It's been soaking up a lot of my downtime this week.
It's been amusing for you, has it? Yes, yeah.
Yeah, from a distance, amusing and slightly frightening.
Yeah, I think there is that. Yeah, I think that's the general feeling. I think anybody with shares is probably feeling the same way as well. But yeah, keep away from your share portfolio for the foreseeable for the minute whilst things settle down. But yeah, we'll get on today's show. We've got some shout outs today, and we've got an announcement to make. For a new schedule within our podcast.
Yes, we have indeed. So from this week, we will be joined by Ian Godbold, industry guru, familiar to many listeners. And once a month, every month, he will be delivering his top tips. Now, Ian is a digital marketing, new and used car consultant who works across franchised, independent and supermarket sectors. So once a month, he's going to dedicate a top tip to a specific topic, and he's actually asking for input from listeners. So once you hear today's, then if you want him to talk about anything next month, then just get in touch.
Yeah, he's there to share, and if you do follow him on LinkedIn, you'll see some of the stuff that he pushes out into the market. And Curtis and I need to stay massively upbeat to stay up with Ian, and a huge thank you to Ian whilst we're talking about him for doing this. I think we've got two fantastic gurus in their own right in their own sectors with Stephen Whitten with his Men Able Moments, and now with Ian Godbold with the industry top tips. So I think hopefully you'll find it a good new format going forward. So as Curtis said there, it'll be once a month with Men Able Moments and once a month with Ian Godbold going forward.
And talking of industry gurus, the recent podcast interview we did with US analyst Michael Dunn has gone down really, really well. I mean, just looking at the downloads that we've had for that particular podcast. So if you haven't heard it, then do check out your podcast feed. Because it's a fascinating insight into pretty much all things Chinese, what the Chinese OEMs are doing in terms of rollout in Europe and the UK.
Yeah, I mean, we really enjoyed the time with Michael, and I think there's a lot of our regular listeners that have now started to communicate and sort of link in with some of the stuff that Michael pushes out into the market. As Curtis said there, we shared a snippet on last Saturday's podcast, but on Thursday, Friday of the week before, we shared the full interview there with Michael. So if you haven't listened to it already, check out your podcast feed. I'll guarantee it'll be the best 30, 40 minutes if you want to know anything about global EV, in particular the Chinese manufacturer strategies, and a little bit of amusement in there with what Michael does talk about. And coming up on next week's midweek, then again we'll hopefully be joined by Jeremy Yeh from CapHPI, and I know it'll be a well worth your time to tune into that one, because obviously it'll be the first of 2025. Jeremy will be sharing what's been happening throughout the month of January with used car values and what he's seeing and hearing from across the market, and more importantly, where he sees the market going as we move towards February and into March and the first quarter of the year.
I'm just taking a reality check, Phil. We're nearly at the end of January. How did that happen?
You shouldn't go there. We're wishing the year away too quickly.
You're listening to the Motor Trade Radio podcast, powered by Motors.
Headlines this week come from Auto Retail Agenda, the FT, Car Dealer, AM and Motor Trader, starting with Rachel Reeves intervenes in UK car finance mis-selling case to protect lenders. Ford terminates 50 car dealerships as it hits its target to halve its dealer network. VW Group confirms it will abandon agency for EV sales across most of its brands. Nearly 3/4 of UK vehicles recall issues remain unresolved. And we have the latest franchise dealer group financial year ends from Stoneacre and Jemca.
You're listening to all the chatter that matters on the Motor Trade Radio podcast. If you're a supplier and would like us to profile your business and reach our audience of dealer bosses, managers and decision makers on one of our dedicated supplier specials episodes, get in touch with Curtis and Philip at motortraderadio@yahoo.com.
So first story this week comes from the Financial Times, and this one got a lot of coverage over the course of the week. The headline there is Rachel Reeves intervenes in UK car finance mis-selling case to protect lenders. So this is the bid by the Chancellor to shield car loan providers from what amounts to multi-billion pound payouts in a landmark mis-selling case, which we've covered certainly over the last few months. And this is after the Treasury warned it could damage Britain's reputation as a place to do business. So this story actually becomes very political because of the ramifications if this was to actually go through. So the Treasury has taken the unusual step of seeking permission to intervene in the forthcoming Supreme Court case in April, amid concerns that banks and other lenders could face a compensation bill costing tens of billions of pounds. What did you make of this one, Phil?
Yeah, I think it's interesting. I mean, obviously there is situations where there is current lenders in the UK that have very vocally and publicly said that they will look at exiting the UK lending sector because this is makes it very unviable for them financially to operate, and the risk of it. And also what seems to be hitting the headlines as well is that, UK investment is being hit now because of this as well. It's having a direct impact on investment, which obviously from a UK government and Treasury perspective, this goes against their economic growth strategy as this starts to happen. Now, the big question with some of this is obviously, one, the risk of these, as you said there, that tens of billions of costs, depending on the outcome from the Supreme Court and any redress that's decided. But obviously with this as well, this for the government and for Treasury to get involved with this legal case will be fairly unique. And some of the commentators say that it is quite risky because it will set a future precedent that the government can get involved with legal cases, which is something that they've never, from my understanding, done before. So it's fairly unique in the way this is starting to happen. Now, we know that Rachel Reeves was, once we got the High Court decision, they were contacted fairly swiftly because of obviously the potential risk, financial risk to the lending sector, not just for automotive, but the broader lending sector. Because obviously it has the risk of impacting, for potential pushing us into a recession if it goes the wrong way. So there's a lot on this at the minute, but also we were talking before the show, and I believe Martin Lewis has done a bit of a U-turn We use that term a lot these days, don't we? But
that won't be the last U-turn on
it won't
stage
be the
show.
last term, no, it won't. But I think obviously now, because of the way it was positioned initially with Martin Lewis there was a lot of people trying to submit 0% finance deals that they'd had on car loans, which obviously there is no disclosure of commission to be declared with that. So he's doing a bit of a U-turn now on of it. So yeah, it's getting quite sensitive. But to your point, the Supreme Court date, I believe, I don't know if there's an exact date
No, I think
in
it's
the
just
court yet.
vaguely April, isn't it?
Yeah. So I think there's still a lot to play out before then. But yeah, it's going to get quite interesting, this one now going forward.
Yeah, definitely. And there's a revealing piece within this story on the FT that I think they've actually seen the submission to the Supreme Court. So the FT has actually seen that. And they're saying that the Treasury claims the case has potential to cause considerable economic harm and could impact the availability and cost of motor finance for consumers. And it goes on to say that the application said that the case might generate a perception that regulation in the UK is uncertain. And it also argued that if liability was established, then the Treasury would be seeking to persuade the Supreme Court that any remedy should be proportionate to the loss actually suffered by the consumer and avoid conferring a windfall, which I think is what a lot of the lobbying is about, this windfall rather than just compensation.
Yeah. I think this is down to that redress, because this can go back to 2007 from memory, which obviously, the risk of that is huge. So I think that's where, the Treasury and Rachel Reeves are trying to get involved, that, there's a discussion around that payout structure and the redress structure going forward. So yeah, I'm sure we'll be covering this one as it gets closer to that April period, and we'll hear a little bit more from that going forward. But going over to auto retail agenda, and Curtis there mentioned U-turns. Now, this is that VW abandons agency, and this is saying that the VW Group has confirmed it is to return to the franchise sales model for electric vehicles from VW Commercial Vehicles, Audi, and Skoda. And this is following the review of the agency model plans exclusively revealed to auto retail agenda late last year. But I believe Seat is remaining, or Cupra, sorry, is remaining on agency.
It is, yeah. It's a great story here and very detailed by Tristan Young. So I do urge you to have a look at the full story. But yeah, the way it's laid out is that Cupra is excluded along with group fleet sales. So they're excluded from this and will continue with agency. And I'm guessing that's down to Cupra's relatively low volumes. And I think the issue that is really picked up within this story is that Volkswagen Group, as a group and its various brands, face this issue of having standalone agency for its EV models alongside of franchise for everything else, for all the ICE vehicles. But because there hasn't been a huge swing towards EV, it became less sustainable to operate these two models side by side for any length of time. So this U-turn pretty much follows what we've already seen from Stellantis, Ford, and JLR.
Yeah, you're right. And I think Cupra went first, didn't they, back in 2021 with their agency proposition. But I know that across the European market, VW as a group have been struggling a little bit, although sites are that the EV growth is up year on year for Volkswagen Group in the main across European markets. But again, I think the challenge with this one now for VW is the man. They've moved people from central office out onto the agency world, and now they've got to reverse all those roles and job functions back into central function again, which will be interesting, following all that work and effort that they put into, moving people into new reporting functions, new roles to separate the agency side of the business from the central function side of the business now. So yeah, there's probably some costs involved with all of that, but I think many of the VW dealer groups or VW represented dealer groups will probably be fairly happy with this decision for now.
Yeah, I think so. As you say, it was getting complex running the two models side by side, and it's going to be complex unraveling all that. But I'm sure at the end of the day, dealers will be relatively pleased with this decision.
And heading over to car dealer now and remaining with manufacturers, and this is that Ford terminates 50 car dealerships as it hits target to nearly halve the network. And this is that Ford terminates 50 dealerships in plans to halve the network. All but 3 retain authorised service status, and Ford hits its target to set in 2020 for this year. So this is the story there that I think the report is that it's now it has halved. So this 50 dealership reduction is now half of where they were back in 2020, which many would say that Ford maybe had far too many outlets for the volume that they've got in the market. And we know that just in 2024 alone, their market share or their volume fell by 23.68% down to a share of 5.49%. So again, some significant moves there for the Ford network.
Yeah, and it's a good story, and I'm pretty sure Car Dealer had this as an exclusive, and this story is written by Rebecca Chaplin, and they do actually get Ford to confirm that the network now stands at just over 200 dealers, and this process has been going on since 2020. Because I remember you and I talked about this on the podcast when Car Dealer broke the story initially. So where we are now is pretty much a halving of where it stood in 2020. And in terms of right sizing, it makes perfect sense because, as you say, last year registrations for the brand were down 24%, which means that Ford at the moment is being outsold by certainly VW, the market leader in terms of volume, but also some of the sort of more premium brands like BMW and Audi. They're outselling Ford, as is Kia. So it's very, very much a reflection of the times and the sort of lower volumes that Ford is now seeing in the UK and indeed other markets.
Yeah, as you say, 144,000 units back in 2023 and a 7.57 market share, down to 109,000 units and down to a 5.63% market share. So again, the Ford dominance is very much fallen away. But positively, it becomes more profitable for the dealers, handling those fewer vehicles through a smaller network, albeit it's been at the cost of other dealers that have lost the franchise. So yeah, it's not very good for those.
Yeah, and of this latest batch of 50 dealers that have been cut from the network, all but 3 have been retained as authorised repairers for Ford. So that relationship will continue. So we'll be back with more headlines after the first in our series of top tips from Ian Godbold.
You're listening to all the chatter that matters on Motor Trade Radio, powered by Motors, the driving force behind multi-site advertising. This is your weekly one-stop shop for all the biggest car retailing headlines from across the media. Available on demand, wherever you are on your podcast feed. Next up is car retailing industry guru Ian Godbold, sharing his top tips on how to steer your business to success.
Hello everyone and welcome to a new feature of the show where I'll be sharing some top tips to help you improve performance and maximise your return on investment. We're in the last week of January and dealers are reporting an increase in lead volumes and a strong run rate on used vehicle sales. So it's critical we keep this momentum going while also replenishing stock levels. And that's what I want to talk to you about today. What happens from the moment you purchase a vehicle? As soon as the vehicle is purchased, whether it's from auction or the C2D channels, so the customer to dealer platforms, or part exchange, it's essential to get it uploaded to your website. The sooner it's online, the sooner you can start capturing data. Do this through coming soon images to give the potential customers an early look. When the vehicle arrives at your dealership or prep centre, take 4 or 5 photos right away. These could show the vehicle as in preparation. Some image software providers even offer AI tools to clean up imagery, so no need to even wash the car first. These tools can virtually remove dirt and minor scuffs so customers see the actual vehicle they're inquiring about without delay. Once the vehicle is fully prepped, you'll need a complete set of images, at least 20 as a minimum. Some leading retailers take between 40 and 60 photos to give customers the best possible viewing experience. Now, let's talk about vehicle description. It's so important to tell the story and sell the story of why the customer should choose the car. AI tools like ChatGPT are incredibly useful for this. If you're not already using it, sign up and give it a try. Ask it to write a vehicle description on the registration number in English with no emojis. And after about 3 or 4 weeks, it will start to learn your tone and style of voice. But always review the text for Americanisms. Use the 80-20 rule, so 80% of your description should focus on the car itself because the car is the star, and 20% should highlight why the customer should choose you as the retailer. Once your vehicle is fully merchandised, it's time to price it right. Pricing should align with the vehicle's desirability, something called pricing to retail rating. A higher retail rating means the vehicle is in demand, so you can command a higher price. On the other hand, lower retail vehicles will require pricing below the market to reduce the days to sell and don't become an overage stock problem. Now, I hope you found these tips helpful. If there's any topics you'd like me to cover, feel free to contact the show through Curtis or Phil, or reach out to me directly. We'll feature your suggestions in one of the up-and-coming webinars. Have a fantastic week, finish the month strong, smash those targets, and I'll see you all again next month.
Well, as you said, Phil, we're going to have to keep the energy high now.
Never expect anything less from Ian. Yeah, no matter what time of the day you speak to him, he's 100 mile an hour. But yeah, fantastic insight there from Ian. And as you say, I think the car is the star. Hashtag car is the star from that one with Ian.
I actually learned a lot from that, including his suggestion and recommendation that okay, you've got the car in, you've just acquired it, albeit by Part X or auction, whatever. It hasn't been prepared, but take 4 or 5 pictures and put them up there and say that it's being prepared, it's in stock.
You know what to do with all your Zafiras on your driveway now, Curtis.
Exactly. Yes. Yeah.
Hopefully you've got rid of all them by now.
Yeah, they're all a bit rusty now.
But as Ian says there, if there's any topic specifically that you want him to cover in the top tips, then please do let either Curtis or myself know, and he'll certainly try and do that in the future monthly top tip sessions there that we'll have Ian on. Or you can message him directly on LinkedIn. You'll find him all over LinkedIn, or you can email us at motortraderadio@yahoo.com. So yeah, please, if there is anything around that sort of retail and SEO space that you want Ian to support you and help you with, and some of those top tips and advice, then please do drop Ian or Curtis and I a quick note on that.
And back to the headlines. So over to AM Online, where the headline is nearly 3/4 of UK vehicle recall issues remain unresolved. So this story is based on analysis from carVertical, and is suggesting that nearly 3/4 of cars in the UK have been recalled between January 2023 and September 24. but remain on the roads with unresolved problems. Now, the study, which reviewed vehicle history reports over that period, found that only 28% of recalled vehicles in the UK have had their defects addressed. Now, some of these recalls involve critical safety components such as airbags, brakes, and electrical systems. While many factory defects are minor, some can actually pose safety risks, making it advisable to get them into a dealership and get them resolved.
Yeah, I mean, they do go on, and that there is a comment in here from Mattis Bruzelis, hopefully I've pronounced his name correctly, who's the business development manager there at carVertical, who says as cars become increasingly modern and incorporate more electrical components, recalls are becoming more common. That fortunately these issues are usually resolved during regular vehicle maintenance, causing minimal inconvenience to the drivers. And I suppose the caveat with some of this will be over the air updates as well as we move into that those kind of updates. But I think the saving grace with this is when you compare with some of the European markets, isn't it? We actually don't look too bad when you look at some of the other data points that they've looked at.
Yeah, definitely, because the highest recall rates were seen in Portugal, followed by Greece and Spain. So, fortunately, that's not a league table that we're at the top at.
No, for once. So we'll keep down that. So yeah, I'm looking forward to more of this insight there from carVertical and that particularly in that aftermarket place. But moving over to the final part of today's show, and this is some of the more latest financial updates. And the first one, as Kirsty said at the start of today's show, is from motortrader.com, and this is that tough used car market sees Stoneacre profits fall 23% to 24.4 million, and saying that the profits took a hit in 2024 as the group grappled with tough used car market, with values on the slide. Pre-tax profits fell 23.5% to 24.4 million on a turnover up 2.5% to of 1.039 billion. It's kind of a similar story we were talking about a lot last year, wasn't it, on those 2023 financials when we covered those, Curtis? But this is their latest figures, isn't it?
Yeah, it's a familiar theme, isn't it? Turnover up, but profits down. And this is for the year to the end of April 2024. And over this period, the group sold 26,600 new retail units, which was actually an increase on 24,500 in the prior year, while car sales were 31,395 compared to 31,500 last time. So slightly down on used cars, but it was certainly on the used car front where those sales were relatively static, but the margins actually fell by 11.8% in the year due to the price falls that we saw across the market as values came down over the course of the year, and certainly in the final quarter of 2023. So that had a significant impact. Although Stoneacre said that the new vehicle supply had returned to pre-pandemic levels and gross margins for new cars had actually increased by 8%, but it looks as though that was offset by the performance of used cars over the period.
Yeah, I mean, you don't tend to hear too much from Stoneacre, but there is in the story there. They're obviously expanding. They've got this new trade parts, Express, TPX. They reference it as new outlets in Blackburn, Cleckheaton, and in York there. And to give you a size and scale of the business, the Stoneacre now operate 64 locations across England and Wales, 148 franchise sales points, and that's representing 26 car makers. So, no small group by any means, are they, in this? So a significant large group.
And final story of the week, and it's another financial year-end story, and the headline from car dealer is Jemca Car Group posts massive £4.7 million loss as profits are obliterated in brutal 2024. So quite a colourful headline there.
Yes. Summed up there.
Yeah, I think it's worth pointing out from the start that this covers the 12 months to the end of March 2024. So the financial year, the bulk of the financial year is across 2023. And that we know that trading was tough in 2023 because 2022, the year-on-year comparisons were very, very difficult to meet the successes in 2022 in 23. So this story said that Jemca Group saw a 500,000 profit disintegrate into losses of over £4 million over the course of the period. So just dipping into that, pre-tax losses of £4.7 million in that 12-month period. And that figure is, it's over 900% down on the previous year's profits before tax of £529,290, marking one of the biggest swings, and what is car dealers is describing as a brutal results season for dealers across the board.
Yeah, and it does cite a few things in the story here, but the bit that does stand out is towards the end of the story, and it's a topic that we haven't touched on today, funnily enough, which is the reference in the UK ZEV mandate, and the comment is that the UK ZEV mandate, which commenced on the 1st of January 2024, requiring a 22% of registrations having to be full EV, increasing each year until 2035, will have an initial negative effect on new vehicle sales as we wait for our manufacturers to produce new models and local councils to install a far better infrastructure. When this is achieved, we remain confident of significantly increased consumer demand. So a little bit of optimism there that they're hoping that whatever comes out of the ZEV mandate review and we start to move forward, that a layer of optimism there that the dealers will start to see light at the end of the tunnel on that one.
Yeah, definitely. And just worth adding that over the course of the year in question there, the used car sales were actually very positive because they were up 6% and new vehicle sales increased by 16%. So again, showing the challenges across margins for definitely used cars and to a certain extent new cars.
Yeah, so I think that's it for this week, but I think hopefully, we're starting to see some of the 2024 financials come out now after the last few coming out for the 2023 full year till the end of December now. So as we sort of see some of these financials and move through 2024, and then they'll give us a better picture of performance for some of those dealer groups. And as we said right at the start of the show there, if you'd not listened to the Michael Dunn interview that's on your podcast feed, I would recommend that. 30-40 minutes of your time, grab a coffee, have a sit down and have a listen to that chat with Michael Dunn. And hopefully, as we did say at the midway break there, if there is any topics that you want Ian to talk about on his monthly top tips, then please do drop Ian a note or Curtis and I. Then we can certainly look at that and hopefully share some insight and some of Ian's knowledge on a top tip of dealing with whatever you want him to look at.
That's all for now. So many thanks for joining us on the Motor Trade Radio podcast. We're back during the week with our catch up with Jeremy Yeh from CapHPI on January's trade values. Until then, it's goodbye from me.
And it's goodbye from him.
Thank you for listening to the Motor Trade Radio podcast, powered by Motors, the driving force behind multi-site advertising. We'll be sharing all the URLs from this week's headlines on Monday morning. To make sure you receive them, just subscribe to the free newsletter on our LinkedIn page. Just search Motor Trade Radio Podcast.